Did you know that it's possible to turn $1,000 into a real money-making machine? It sounds too good to be true, doesn't it? But believe it, with the right strategies and a bit of discipline, it's not only possible, but could be the start of your journey towards prosperity. While many think that only millionaires have access to the knowledge needed to multiply their wealth, the reality is quite different. Warren Buffett, one of the richest men in the world, started with small sums and, with intelligence and patience, built an empire. And it's exactly this kind of wisdom that we're going to share with you today. We'll debunk the myths and show, step by step, how you can turn an apparently modest amount into something significant. No, we're not talking about miraculous methods or empty promises of easy money. On the contrary, these 5 strategies are based on principles used by great investors, but adapted so that anyone, even with limited knowledge, can start down this path. And the best part, you don't need to be an expert to understand and apply these tips. So Wizard, if you're ready to take the first step towards changing your financial life, keep watching, because the tips that follow might be the key to your dream retirement. This video is for informational and educational purposes only and does not constitute investment advice. Consult a qualified financial advisor before making any investment decisions. Investing involves risks, including the loss of capital. Past performance does not guarantee future results. 1. Invest in yourself. Investing in yourself is, without a doubt, the most important step someone can take towards wealth. When you spend time and money acquiring new skills and expanding your knowledge, you are actually laying the groundwork for a more prosperous future. Think about it. Each book read, each course completed, and each new skill acquired increases your knowledge and enhances the way you view the world. This practice is like planting a tree that, over time, will bear fruit in the form of better opportunities, higher salaries, and consequently, more money in your pocket. And it's not just about formal education. Practical skills such as learning to negotiate, lead, or even manage your time effectively are equally valuable. Now, imagine that you decide to allocate a portion of your income to learn about investments. Instead of just saving money, you decide to understand how it can work for you. Learning about how dividends work, for example, or how to create passive income, can make the difference between working out of necessity or for pleasure. The beauty of knowledge is that it never depreciates. In fact, it appreciates over time. Each new financial concept you master, such as financial planning, puts you one step ahead, closer to achieving the longed-for comfortable retirement. Investing in yourself also involves looking at your future with a strategic vision. Think about courses that can bring long-term returns. A good example of this are specialization courses or certifications in high-demand areas. You could, for example, invest in a financial analysis course or programming skills, which are extremely valued in today's market. These educational investments not only expand your opportunities, but also open doors to new sources of income. And speaking of new sources of income, but that's a topic for the next point. 2. Avoid investing everything in the stock market. Putting all your money into the stock market might seem like a good idea, especially when you hear success stories of those who have become wealthy through investing. But the reality is that if you only have $1,000 available, this strategy might not be the wisest. The stock market is volatile, and the return you can expect from a small investment may not be significant, considering the risk involved. After all, the goal here is to increase your wealth consistently and safely, not to bet everything on a single wager. Additionally, it's important to remember that with such a limited amount, fees and commissions can end up eating into a considerable portion of your potential profits. It's crucial to diversify your investments and seek alternatives that might generate a more robust and secure return. If you're thinking about investing in stocks, it might be better to start by learning more about the market, understanding how dividends work, and planning financially for regular contributions. This way, you build a foundation before exposing your money to market fluctuations. A practical tip would be to invest time in investment simulations before putting your real money on the line. There are several platforms that allow you to test your strategies without risk, which is an excellent exercise for beginners. And it's not just about avoiding the stock market, but about being strategic with the money you have. With $1,000, it might be more interesting to use it to create an additional source of income, something that can generate a steady cash flow that can eventually be reinvested in higher return opportunities. And that's exactly what we're going to discuss next. 3. Create an additional income stream. Creating an additional source of income is one of the most effective ways to accelerate your path to financial freedom. In the digital age, opportunities are vast and accessible to practically everyone. You can start an online business, sell products, offer services as a freelancer, or even create content on platforms like YouTube or blogs. The important thing here is not to rely on a single source of income. Diversifying your income streams is a smart way to protect yourself against unforeseen events and build a reserve that can be reinvested in other projects or investments, such as stocks, real estate, or even education. Let's say you decide to start an online business. With $1,000, you could invest in dropshipping products or perhaps create a digital course on something you're knowledgeable about. The profit generated from these ventures can be reinvested to expand the business or even to enter more traditional markets, like real estate or the stock market, with greater security and potential return. The key is to start small, with something that doesn't require much initial capital, but can grow over time, generating a steady flow of passive income. Furthermore, creating an additional source of income gives you the flexibility to reinvest the profits into opportunities that are truly worthwhile. Imagine using the earnings from a side business to acquire index funds like VO or SPY, which we will mention next. This not only increases your passive income, but also diversifies your investments, reducing risk and increasing the chances of achieving a peaceful and financially secure retirement. 4. Consider index funds for safe investment. Index funds are an excellent option for those looking to invest safely and efficiently in the stock market. They provide a way to gain exposure to various companies without the need to pick individual stocks, which can be complicated and risky for beginners. Imagine you're building an investment portfolio. Instead of choosing specific company stocks that can rise or fall unpredictably, you opt for an index fund like VO or SPY, which reflect the performance of a broad set of companies, such as those in the S&P 500. This strategy reduces risk, as your investment doesn't depend on the success of a single company, but rather on a diversified group of large corporations. In addition to safety, index funds offer a simplicity that is hard to find in other types of investments. There's no need to monitor the market daily or try to predict which stocks will outperform in the future. With index funds, you benefit from the overall upward trend of the stock market over time, which is especially appealing for those focused on the long term, such as those aiming for a comfortable retirement. Moreover, the dividends paid by these companies are automatically reinvested, contributing to the continuous growth of your assets. Investing in index funds is like planting a tree that grows slowly but with deep, resilient roots. By reinvesting dividends and making regular contributions, you create a passive income stream that over the years can turn into a significant amount of money. And if you combine this strategy with other forms of investment, such as real estate, your opportunities to increase your wealth multiply. Speaking of which, let's move on to the next step. 5. Explore real estate investments. Investing in real estate is one of the most traditional and reliable ways to build wealth over time. If the stock market isn't to your liking, or if you seek diversification, the real estate sector offers an excellent opportunity. Through real estate crowdfunding platforms, or REITs, real estate investment trusts, you can invest in properties without the need for large sums of money. With these tools, you can participate in large real estate projects such as commercial or residential buildings, even if you have only a fraction of the amount needed to acquire a property on your own. This allows you to grow your assets gradually, with relatively low risk. For example, by investing in REITs, you acquire shares in companies that own or finance income-generating properties. This means that, in addition to potentially benefiting from property appreciation, you can also receive a portion of the profits from these companies in the form of dividends. It's a way to obtain a stable passive income without dealing with common property owner issues, such as maintenance or tenants. Moreover, the real estate market tends to be less volatile than the stock market, providing an extra layer of security for those seeking a more stable way to grow their wealth. Another advantage of real estate investment is the potential to leverage financial resources. For instance, you can acquire a property with a mortgage, using a relatively low amount as a down payment and leveraging the property's income to pay off the mortgage installments. This type of strategy allows you to grow your assets without needing to spend a large amount of money all at once. And by combining real estate with other safe investments, such as index funds, you build a solid and diversified portfolio. Think about everything you've learned so far. How to invest in yourself, avoid common pitfalls in the stock market, create additional income streams, explore safe investments like index funds, and even invest in real estate. These strategies are the foundation for multiplying your money and building the financial freedom you desire. But remember, the power is in your hands. What will you do with this information? Will you continue leaving your financial life to chance? Or will you take the next step toward your independence? Now, I challenge you to start the change today. What will be your first step? How about starting with that investment in yourself that you've always postponed? Or perhaps exploring opportunities to create extra income? Whatever your choice, the important thing is to take action. And don't forget to keep learning and growing. Subscribe to the channel and turn on notifications. That way, you won't miss any tips that could transform your financial life. Let's embark on this journey together.